Hello guys, glad to have you on board again today. So we're going to start making this correction for the MCQ test I gave you guys last week. We're obviously going to review the first 10 questions today, but only the first 10s, and the 10 to 20s will be taken care of probably tomorrow or eventually next week. But I just done that for the French users, and it already took like an hour to get to the question number 10. So I don't want to spend more than that on a single video. So there will be two parts in this one. Obviously, in the future I will stick to 10 questions. It's just that for the first one I wanted to somehow layer the level and the difficulty to be as expected. So yeah, it won't be that complicated in the future, and there will be less question, obviously. Anyway, let's get it started. So first of all, I just got 117 answers at the moment, and that's far less than the actual numbers of users, so I don't really get how it's possible. So I'm not genuinely doing some catchy stuff to invite you guys to do here, click that, whatever shit this is. I'm trying to leave you guys alone and do whatever you think is necessary, but I was expecting a lot more of you guys to just participate. Not that this is not enough. It is more than enough to me to figure out, and having a little bit of a statistical advantage by reading what you guys gave me as an information. So thank you for this, but I'm just surprised. I thought at least to have the number of users, which means some people just either didn't really get the informations or anything like that. So, well, I'll see about the next one. But like I said, I was expecting a little bit more participation rate. So we'll see how it is for the next one. Maybe it's just because I don't communicate enough. I haven't been mailing the users and things like that, because I don't want to bother you guys with such things. So anyway, let's get it started. So what we're doing here is a simple question. You identify the context and maturity. I'm going to stick to these first 10 questions today. They've been split in two ways. The 1 to 6 questions are relating to both prices and context analysis. Questions 7 to 10 are done without the prices, in which I gave you only the framework indicator render without having the candlesticks on the charts. I duly noted the problems regarding the zooming in and out, the ability to zoom in and out of the actual image. The thing is that the upload quality has been significantly lowered, and I didn't really want to do it all over again when I figured this out. So this will be fixed by the next one, and just so you know, on the next context, all you'll have to do is to right click and you'll open in a new tab. And by doing this, you'll simply have access to the high resolution file. But it's just that I've been uploading them first, and they've been downsized by Google. So next time I will upload in full size, and by right clicking and opening a new tab you should have it fully displayed. So obviously I know it's been a problem to some of you, because obviously that also means that you weren't really having a lot of details, and I can understand that it might have been problematic. So anyway, that being said, question number 1. So the way we're going to deal with it is that I'm going to use some tools to just draw on these charts, and we're going to do what you have to do in analyzing obviously any stuff in here. So we're given a correction to this test, but moreover, it is not about proving that you're right or wrong or anything like that. It's just there are multiple answers that's going to be possible, because in here the actual answers you'll have available are the ranges, and I ask if you are able to figure out this range to be neutral, bearish, or bullish. But what I care is that when you're in a range context, I want you guys to put the actual range answer, no matter if this is bullish, bearish, or neutral. It's just like having some shaded grays answer instead of just black and white. But the real black and white is whether you figure this out to be a range or a trend. I don't want you guys to be wrong about ranges or trends. All right? So it is more about that. So multiple possible answers every time. And what I care about is most likely you not taking the bad answers. There are just a few bad answers, and some of you have been making those mistakes, obviously. So if you've done this, don't blame yourself. All that is important in here is that you do those mistakes in these MCQ tests instead of doing them on real-time market. So the next time these same kind of context will reproduce, you'll be able to pick the right decision at that time. So these are the options. I ask you guys whether range or trend, and if you can polarize the range or give the majority of the trend. Otherwise, you got excess, bubble, and others, which means you don't give a no. You don't even know. It feels like noise to you. So let's get this started. How do we figure it out to be a goddamn range or a trend? The first thing first you're gonna do is really, now you're gonna assess where do you start from. Where are you right now? Are you higher, significantly higher? Or are you quite at the same price, and what the globality of this chart has been saying. So first of all, and here's a trend. So whoever's been answering range in here, kind of a problem, because if it is a range, then you cannot really figure this out right now. What we are at least is a late stage trending, or at least we were trending most of the time we spent on this chart. So that doesn't mean the answer is going to be trend. That means that it is most likely going to be trend than ranges. But now we're going to have to dig a little deeper. So what we can tell is that there was a trend. Now the question is it still ongoing or not? To answer that question, you have to uncover the trend's underlying structure, the layers, the steps, the maturity steps. So we're going to do it easily by identifying the first thing first, the accumulation. In here we can't see no accumulation because it was prior to this, but we can definitely see the breakout. We had a breakout in here. It's been mostly done in here and confirmed right in here. So you see the breakout candle, all right, and then the prices break through context and accelerate through trend channel in here. So this is where the breakout occurred. The market stood bullish right after, pushing and pushing and pushing and pushing, pullbacking in here, so we can see that is a pullback. So you don't really see it, but normally there is a divergence step in between. So in here we don't have access to momentum, so we'll say, okay, this fits the pullback plan. We're pullbacking at 50% trend channel, context channel, and we can see that prices have been pullbacking to a support area. And closely, they've been more likely they've been retracing up to the breakout area. Then the market should have been final accessing, which means anytime you break through the context, normally this is where the market stops. In here, as you can see, it didn't really stop. It kept going, kept going, kept going, kept going, kept going, and then we finally had another divergence and a bearish reactivation. Two sets of waves to the downside, back to support context, and we can say this was the final excess. We can see it's a brutal one, just so you know. This is the French index on a total return basis. So the thing is that back in here we were full QE. This is where the ECB has been triggering QE, so obviously it's been thriving, some prices rising significantly, it's been thriving, some bullishness in this market. So as we had some kind of an overextended final excess, it is justifiable some way because we had money inflows, monetary injections, and therefore it has been pushing price, been a catalyst to the markets. So we can very well explain why this have been kind of a little bit more than what it could usually be because we just had a catalyst pushing there. So in here normally we're ranging, which means at that point if I cut this chart in here, you would have told me ranging. You would have definitely said we're buying this dip because that's what we do. We don't questioning, but normally you would profit take at this point, which is maximum 76% fib. In here instead, we're breaking the trend channel, all right, and we're rising back to resistant context. So in here, you have an additional information. You would have bought, profit taken, and you would never have traded this because that's not possible to trade, but still it was because back then we knew that this was the trend pullback. And this was actually just a sub-trend. So what we've done is actually we broke up, we pushed the divergence in here, we pulled back in here, so this was the final excess, all right? So these are all the areas you would have sold as a final excess. Anytime you break through context, you try to sell that shit because that's the end of the trend. We tried multiple fucking times before managing to actually get to the support context. So this is where you lock on your profits, and you should instantly have noticed this, suggesting we already broke through first support, so this range is probably bearishly oriented. That doesn't mean it's going to be. It means the algorithms detect something is wrong. But still, that's a range fucking signal. So the actual context we're having right now is this trend is over. Since then, we started to range. We just don't know what the range looks like. In a bearish range, we should have lower highs, which means at that point, I'm okay for a bearish range. At that point, I don't nearly think we're bearish ranging. That's not even possible. Still, the signal is here, and ranges can have multiple and more complex structures. But in here, this doesn't really fit the plan. So something goes abnormal at the current stage market, but still the context you're having right now is not a trend, because the trend got over at this stage. This is the first bottom of a range, and we're searching for the next one. It's hard to say where it's going to stop, because we're kind of being quite irrational at the moment. Could be stopping just in a few days, could be stopping in a few months, and we'll go crazy bullish. But anyway, we're ranging right now, we're late stage trending, so if we go higher, it's just because of a bubble. So it's going to be excessive market pricing if we go higher than that. And let's be honest, we already had early signs that the market was exhausting itself. The context boxes in here was unfolding multiple times in a row. This is a sign of a late stage trending. So there's no trend anymore. Whether you like it or not, all of those markets are ranging. The thing is that we got some nasty euphoric at the moment, very dangerous, could cause bubbles, but the actual market and the way you should trade this is not to anticipate bubbles, because bubbles cannot be anticipated. So the way you trade those markets is just a goddamn range. You're breaking through context, you're looking at any selling activity, and you take that as a bearish entry. So the current market context, out of the multiple answers I've been offering in here, I would accept neutral range. I would accept bearish range, because you do have the bearish signal, even though we've made new highs, so it is not really a bearish range. I would accept bullish range, but any fucking way. There's nothing else. This is no bullish trend. The trend is over. I think it's too late for the final excess. The final excess was in here, and we're already pulled back. We already broke through the context channel, so this is no longer a final excess. We're ranging at the moment, so I accept all the ranges structures. I do not accept excess and bubbles so far, because it requires us to keep on going and to unfold the support and context boxes. So far we're not. We may be in the future, I don't know yet. All I can tell is that if I had to put a context out of here, that will be neutral range. Alright? I don't know if it's bullish or bearish, because it should be bearish, but apparently we're bullish, so I would kind of dampen expectation, and I would answer neutral range. So these are the answers you gave me. First mistake, 42% of you have been answering final excess, and I don't nearly think that's the case. I think we could be, actually. Yes, could be. But I think this is where the final excess have been taking place, and that this suggests we're already at range. So I would still accept the final excess, and in that perspective, that will just be the pullback of a much longer than expected trend. But to me, this is where the pullback occurs. This is where it goes. So it is hard for me to say that this wasn't a pullback. We got back to the trend, to the context channel, so it cannot be any different than a pullback. So there is no two pullbacks in a trend, otherwise it is not a trend. So the trend has an end, because every trend has an end, and normally this end makes and set itself right after the pullback. So in a current context, we're ranging, but I would accept late stage trending, as we're still making higher highs, so it's somehow understandable that you guys could have gave me the answer of trend final excess. Anyway, final excess is like a range, and you have to trade it accordingly. So even if you got it not right, I don't get it to be as a wrong answer. It's an acceptable answer. So final excess is acceptable, even though that's not really what I was expecting. All the ranges are good, which means 75%, more than 75% of you guys got a right answer out of here. By just applying the strategy rules, you will get gains, even if we're not agreeing on what kind of range this is, or if we're still late stage trending or ranging already. Any fucking way, we'll trade this market the same way, which means there is no right and wrong answer. It's just try not to take the really wrong one, which is if you think we're still having some trends in here, it's not possible. The answer is in here, late stage trending or ranges. Question number 2. let's do the same exercise in here. Instead of a bullish trend, we do have a bearish trend. We're just going to try highlighting, but you can definitely see these prices have went from point A to point B in a directional manner. So first thing first, you put down your things and you got to identify the trend steps. So it is hard to say in here, and it's a very odd manner to do it, but we had the trend accumulation in here. We wouldn't necessarily have been able to anticipate this, as normally we're supposed to do this close to the trend channel. So the context channel we should have kind of accumulated in here, but still breakout in here. We break through both context channel and trend channel, and prices are accelerating. Then we push up to divergence. Up there we probably have one. You can see the momentum is slowing down. The pace is like, all right, it's a reverse parabolic. We're losing steam. We're pullbacking, 50% trend channel. We can see the ranges scenario, the ranges activity. So we definitely confirm that the pullback is setting itself. The trend is maturing. We have the final excess to make, final excess. Weirdly, we have no breakouts. We should have a breakout in here, but still, we're breaking through context, so you start getting the fuck out of this trend here, here, and here. Here you've got the trend activity suggesting that definitely this trend is over. We've done every step of this trend, so now you're done. You're no longer selling. You can even buy if you're an aggressive trader, but you know it's gonna trend, and all you can forecast is to reach out to the resistance context to build a goddamn range. So that's the same old rule. Trend is matured. In here, we know that we found the final market top when we reach out here. So at this point, you can validate the final excess that has been terminated in here. So what we know is that we've been building a major market top in here. We've been terminating the trend in here with an in-between pullback in there. We're now looking at a range boundary, all right, and we overcome the context in here, in here, and in here. I don't know what the signal. I have been putting the signals for you to risk manage. All I can tell is that this is professional only anyway, or risky or experienced traders only, because in a range, remember that there is one rule: you cannot trade below aside from 23 to 76% retracement. So in here you don't have retracement to do this, so you cannot even do this. Only experienced trader can take those trades, because the range is still not mature enough for beginners to trade it. Beginners will start trading in there, all right? So first boundary, and then in here interesting price breaking through context, and interesting price finally. So now we're getting to the real-time market. We're going to be able to analyze. So first part of this market was a trend. All right, so we had a bearish trend that's been setting itself right at the end. But remember that we terminated this trend in here, and we were building probably the first range boundary in here. All right, only experienced trader could have caught this. Otherwise, others were just waiting. All right, so when the market built this and returned this, is where you started to put your Fibonacci out of this top to this bottom. All right, so doing this, you probably had a 70, back then in here you probably had a 76% fib in here, or probably even lower than that, a little bit lower. So 6 point doesn't fit the plan. You cannot trade this. 7, you can trade this one. This is where you would have bought. All right, so buying this one is the only thing that low risk profiles would have been able to take. And now here comes the number 8, because right now we're still in this range with a Fibonacci retracement set from the top to bottom of this range, and probably the 76% fib has been there, or eventually a little bit lower. So yes, selling number 8 was possible, but still, do you see a goddamn triangle? Remember that you cannot sell if you're a beginner until you get a triangle beyond the context. So now it was an odd reversal out of a range, but still you couldn't catch this one. Whether you liked it or not, it isn't possible for you to catch this. But still, all you can see is that range context, range signal, range signal, range signal. So anytime we get to a target, the market retraces. This is definitely a goddamn range, all right? So in here, the current market status is a range, all right? It's simple as that. So question number 2, what were your answers? I'm going to show you so you see what it looks like. All right, so question number 2, this is, oh, sorry. This is what you guys have been answering, all right? So this is how it looks like. All right, so you can definitely see that most of you guys have been answering neutral range and bearish range, which I totally understand. This is up to you to figure out. I didn't nearly give you enough information. If I had to give you a bias, I would tell that out of a bearish trend, generally the range will set itself to be a bearish range. We have decent chances, or more chances, to keep on following according to this trend rather than reversing it. But still, it needs to be seen out of a higher level context, higher time frame context. All right, so in order to say if this range truly is bullish or bearish, we don't know, because in here, if you figure this out, I mean, just look at that. All right, the bottoms are at the same price, so it is a double bottom, so it is hard to say what this range is. It's more likely a flat range, so I would say it's a neutral range in here as well. But those who want to give it an actual side, I would say favor a little bit more the bearish range. So I would say neutral range is absolutely acceptable, and that's what I would answer. If you want to answer bearish range, I can very well understand it as well, which means you favor selling just because the previous trend was bearish. You will slightly favor selling because, moreover, you failed and you got double bottom structure. So if we go there again, it's probably going to be a nasty breakout. All right? But still, you weren't able to sell in here because no signal. Question number 3. So this one, you guys were pretty great, because if I take all the range context, you have more than 2/3 of good answers. Some people have been trend breakout, trend accumulation. I don't really get it. So this is a problem. If you've been seeing some trends or early trend signals in here, you don't get it right. Remember that the mistake you're doing is that in order to forecast early signs of trends like accumulation, breakouts, you really need to validate a mature range structure. In here, it's not the case. You know, the trend ended in here. You know, we build a first range boundary in here. You know, we build a second one out of a double bottom structure. Does that make that range of mature range? Matured range is at 4+ boundaries. We're at 3. So we're still immature ranging, which means we're looking at the 4th one, and only after this one being validated, which means first of all we need to get the fuck out of resistant context to make sure that this is really a valid top, and once it is, then you can forecast eventually the market to build a bearish accumulation in here. But at the current stage, there's nothing suggesting we're accumulating. Nothing suggests we're early trending as well. What we have in here is just a market kind of digesting. What we've done is that we try to break in here, and the fact that we'll pull back in doesn't seem like a breakout. And moreover, you always need to break something. Take this trend line. Did we break it? No, we tried. So if we were about to accumulate, we'll do it right now. But still, it requires a lot more information. So at the moment, you don't know enough to forecast this to be early trending. It could be, but still, it would have to be confirmed by a strong support in here out of the bigger time frame charts. All right, so I would say range is more acceptable at the moment. Waiting for further information. This range still has probably a few a little bit more a hesitation to go forward before actually forecasting an accumulation or even a breakout. Question number 3. All right, definitely another bearish trend in here. So we're gonna do the same old job. All right, we're gonna just identify the structure for this. So market top, market bottom, rejecting trend channel, back to context. So this is the accumulation. All right, you can say that for sure. All right, when done context, trend channel, context, this is an accumulation phase. Next phase is breakout. You need to see a sine wave breakout and price breaking through context and trend channel. So this is where your breakout occurred without a goddamn problem. All right, then you keep on pushing until the market is divergent. Nothing, nothing, nothing. Yes. All right, you can see we're breaking through context, but still now we're losing steam. You can see that the pace is slowing. So we stop being divergence here and here and here. This is where you've got the divergence setting itself. The next step is the pullback. So in order to validate the divergence, you need to see the prices pulling back. Bam, they're pulling back. Trend channel is pushing us backward. All right, and this is where your final excess has been set in place. All right, so this is where bull guys, those who have a bullish vision, or those who are professionals can start buying ahead of a range. What are we going to do? We're going to target this area, obviously. All right, target this, and then we're going to wait for the range to set itself. But for now, what we have in here suggests late stage trending. All right, but earlier we were more mature. Remember what we had, right? Remember that earlier we had done this and we've already done the range. So back in here we were ranging. In here we still don't, but we expect similar context. What we are right here is the exact replicate of being in there before. So what is the current context in here? It's a goddamn trend final excess. Right? We've made the pullback, we've made the divergence, we're far away from the breakout areas, we definitely set at this trend, we're back into the context, we're definitely late stage trending. It is not about time to forecast more bearishness, it is about time to fucking profit take. And contrarian traders and professionals can start trading against the trend to build the first boundaries of this range. What are your answers on this one? Let's have a look at this. Alright, that's pretty balanced. So some people, 20% have been saying trend pullback. The trend pullback was in here, so now we're no longer pullbacking, you're just too late. This is where we were pullbacking, so if I ask the question without this afterwards, giving me a pullback answer would definitely be right. Trend divergence. I don't think the divergence set itself in here. I think it set it clearly in there, and you can validate it by the pullback right after. So to me, trend divergence and trend pullbacks are wrong answers, and many of you guys have been getting those too. 19% for pullback, 13% for divergence. So it is a big number. It's more than 25%. Sorry, it's yeah, it's almost 33% of bad answers. So 1/3 of you guys have been giving answers that were way too late. All right, so yes, the divergence could be setting itself in here, but not on this time frame. So this divergence will probably be a divergence on the higher time frame. All right, so make sure that you're analyzing what's in front of you. There cannot be the divergence in here because it was there, and this is definitely a pullback. So this can only be the trend excess. In here I'm accepting just this answer. All the other answers are not good, which means you're just 17% figuring this one out. So we definitely have to work around these charts because there was only one good answer in here. I cannot accept anything else than the trend excess. So I've been noting this one and I paused it, so we're definitely going to work around this one on the next live session because there's a problem. I don't see how you guys can just be 17 to give me the right answer out of 100 persons answering the questions. So it should be way more than that, so probably I haven't done my job well enough, but this is clearly a trend, and this is clearly how you identify late stage trending when it's about time to get the fuck out. Question number 4. So in here it's a little bit more complicated. You can see it. This is easy. This is definitely a trend. So this is more complicated. Definitely in here, range. So what we do is, first of all, we try to highlight and filter out any fucking time we weren't trading aside from context. Alright, so what we do, we plot the goddamn tools as well. Alright, and we're gonna highlight any fucking time we've been breaking context. There. So have a look. Oh man, the context was pretty damn unfolding boxes, both context, support and resistance. So this is an excessive market. You don't know if this is a bubble or not, because the only difference between excessive market and bubbles are the parabolic scheme prices. So we don't have enough information in here. All we said is it is a market excess. Alright, so the early beginning of this chart, trend excess. Now in here we break through context, pull back to context, break through it. Alright, break. So these are all the key points. Now we need to figure out, we need to read the story. Remember that there is not generally just one answer. It's just that you're going to erase what answers are not possible. So the trend range scenario is that, first of all, you've built your end of trend in here, right? Because that's where you've been starting to range after an excess. So in here you can define that you've built a major top, All right, so major top is building here. Then, all right, breaking context, breaking context, breaking context, breaking context, breaking context without ever getting back to resistance context. All right, then here you get to resistance context again. So what do you figure out about this? Market top, market bottom, 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 bottom. All right, we cannot validate this one only when we got in here. We tried in here to be bullish, but we failed. We've been failing without entering the resistant context. All right, so what you have in here is not a trend. It is not trending in here. There's no breakout. There's nothing suggesting a trend. Do you see a cross in here or anything suggesting the bears are taking over? No, nothing. It could be some way of an accumulation in here, but we failed the breakout. Definitely failed. So in here, this really looks like a range. All right. Then we'll pull back in. All right. In here we don't break the context, but in here we does. So it's 2 times breaking context to the upside. I would say we found another range boundary in here. 1, 2, 3, which means we're still ranging, and we're still immature ranging. We need to find out the 4th boundary. We might have one in here, but in order to make it valid, we need to get there. We need to cross 50% trend channel. So the next area of interest is in here. All right, if prices gets there, you'll know that this is a valid 4th structure. So you will switch this trend to be mature, to this range to be mature, and you'll just figure out what the goddamn look like is. It will be lower highs and higher fucking lows. Worst case scenario, which means it's probably a goddamn triangle. So in that perspective, you're going to play accordingly. You're going to wait for a nice final one, accumulation, and you'll hope for a bullish breakout or bearish breakout. But in this context, all you know is that this is neutral. You definitely have an additional information about the fact the market was excessively bullish back then. So I would say, in a speculative perspective, all the range answers are good, definitely good. But if I had to favor one, I would favor the bulls. Simply because we come out of an overextended bullish trend. But if this was a strong bubble, then normally this can be crashed afterwards. All right, so it is hard to say. Once again, we don't have enough information in here. I don't really give a shit about you giving me the bulls or bear range activity. I more likely care about you answering range in here more than 50%, and that's exactly what's been happening. So these are the answers. All right, I'm going to show you that to them. All right, so as you can see, 32% bullish range, 8% bearish range, a 45% neutral range. So more than 80% of you guys have been giving right answers. All right, so you clearly know how to trade ranges, and that's good, because that's definitely what most people don't know how to do, which is weird. Normally you're supposed to see this as easy, fucking easy, and this is where you have problems. But in ranges, you're goddamn good. That's great, because this is in ranges that people get to lose the more of their money. So if you're good at ranges, then you're probably going to be better than average. But still, if you have problems with trends, we're going to have to work this out in some specific educational videos. So in here, to me, I would say neutral range or bullish range, only if you take accountants of this being an excessive market. But I would like to see what it looked like back then. Question number 5. What is this? Oh my God. All right. So in here, it is no trend. It is no range. As you can see, it's abnormal. The volatility is pretty low. The market has a consensus. Feels like it is just about bulls, and the bears have nothing to do in here. You easily see that quite rapidly the boxes are unfolding multiple times in a row. All right, so it's definitely a goddamn excessive market. Going straight forward, all right, you can see that there is not really a parabolic scheme move. It's more like a straight line, all right? So point A to point B in a straight manner. So it is not good, but definitely in here you've got your informations, all right? So it was a range back then. You can clearly see the top range building itself. It's here, all right? Damn, building a top, building a bottom, building a top, building a bottom. So this is what's been happening on this market. Top range, bottom range, top range, mature range, and trend breakout, but this trend hasn't been accumulating. It's been straightforward, so I don't know what the hell happened in here. All I can tell is that probably a catalyst has been pushing prices to the upside. Something has changed in the structure of this bullish to bearish demand, making this crazy fucking bullish, so bullish that it's been excessively bullish at that point. So this is the current context. We're in a excessive market, but still we were in an excessive market in here. All right, and what do you see in here? Range. Does that even fit the excessive market kind of structure? When you have a range, it means you're no longer in an excessive market. So some of you who've been giving bubbles answers or excess answers, no, that's no good answer. Simpler, you've got so many range signals actually. Moreover, look at the context boxes. Now they're folding each other multiple times in a row. So we're no longer bullish at the moment. All right. What we are in here is two things. I can accept multiple answers in here. I could accept any range because you can trade that as a range. All right, and definitely you're going to try selling anytime we overcome the bearish context, but it's going to be higher than that, right? And you will forecast the range boundaries as being this and this and this, but I don't nearly see this as the end of the excessive market, because excessive market are just trends that lose grounds, trends that trend too fast. But excessive markets are just catalyzed trends. Bubbles are bursting and they're going to be trading differently, speculative bubbles. In here, I don't think we were speculatively bullish in this thing. I just think we're clearly excessively trading bullish, and we're going to have to pay the price, which means when the market will top, the retracement will be long and deep, but this thing isn't normal. All right, we've abnormally priced in some good news, way too much apparently, so we're going to have to consolidate. So anyway, trading this as a range, I'm okay. Trading this as a bubble, I'm not okay, because there is no parabolic scheme move. Trading this as an excessive market, definitely yes. But even though this is, I would also accept the trend final excess, because this thing, just look at this, even if it was a crazy fucking bullish, it still has a breakout. Still, instead of pushing to divergence, we've been crazy fucking bullish, but you've seen some early ranges activity in here suggesting this could be feeding the plan for a divergence. We're definitely pulled back in here, so this could be the final excess. So I also accept those of you who will trade this as a final excess. This is totally acceptable to me. All right? So in here, all the good or acceptable answers are trend final excess or all the bearish, all the ranges. All right? It could be bearish range because there's been a market excess. I can accept that. It could be bullish range because this could be the beginning of a speculative bubble, and therefore we'll just go sideways in here before bursting it upward. So bullish range is totally acceptable as well. Excess is, I think, possible, but bubble, not yet. We're not even yet in a bubble. This doesn't fit the bubble's plan. This is an excessive market, definitely, who is currently ranging or late stage trending and waiting for further informations. All right? So anyway, you can take those selling trades, but very, very cautiously, and only if you're an experienced trader and know how to manage risks. So I would say in here, to me, it's a trend final excess. But this is not trend. This is just a bullish or an excessive late stage trending. All right? Question number 6. Sorry, what were your answer on this one? 45% have been saying a bubble. So this is no bubble. Remember that the difference between an excessive market and a bubble is the parabolic prices. There is no such thing in here. It's just the linear, low volatile stuff. Doesn't nearly even fit the bubble. Some 22% have been saying final excess. Great. I accept that this one. 12% have been saying excess. So in a global manner, 1/3 were right. Regarding the ranges, we've got 10% of both ranges, bullish, bearish, and neutral ranges. So I would say it's a 45% success on this test, but it's not good enough. So this one, most of you guys have got it all wrong. but not that big of a wrong. It's just you got wrong about a tiny little piece of the puzzle, which is you really need parabolic prices to figure out this to be a bubble. It is just no bubble. It's just it's just an excessive market, or a late stage excessive trend. Okay, so I would say you didn't really cut the right answer, but the bad answer you gave is not a very bad answer. All right. Question number 6. What is this? Okay, it starts to get interesting. It's the last time we're going to see prices. The final 4 questions, we're going to do the exercise without the prices. So in here, let's do the same thing. What does it look like? We're basically same price as we were at the origin of this chart. So we put out the range context and we're just trying to make it valid. All right, we're seeking for information confirming that this is a range. So the first thing first, when this is a range, when you see this, you say, all right, normally this market is ranging, so I have early clues that this is not really, this is a mature range, and we can definitely say that we have the 2 boundaries, so you put your goddamn Fibonacci's and trade accordingly. So we're going to go a little bit further in here to make a full analysis of what is available to us. So we can see in here unfolded boxes multiple times in a row. All right. So what is this? It's a goddamn excessive market. Doesn't nearly fit the bubble. We don't have enough history to figure out to be this. So all we can tell is that we terminated this in here. So excessive market, pullback, final excess, and bam, what is this? It's a goddamn crash. So now this market has a crashing structure, all right? This is not normal pricing. We've been fucking up the value. So you can definitely say this was speculative bubble and speculative crash. What do you do out of a crash? You wait for a goddamn 61 to 76% Fibonacci retracement. We were nearly even there. We were trading 50% in there, so this is not the dead cat bounce. And moreover, you don't have the dead cat bounce answer in here, so I will put it in the next chart update, but this is definitely no dead cat bounce in here. Not enough. We need 61% retracement. So we keep on going further. All right, no pullback to context, so we don't give a shit about that. All right, here, that's interesting. All right, here again, anytime in between, we've been rejecting trend channel. So is this a bearish trend? Yes, it could be. But in a bearish trend, you need to validate the goddamn breakouts. This is where you would have had that breakout. So where the fuck did you pull back in here? That's not how it goes. All right, the breakout level would have been there. In here, all right, you break out the support, all right, so this is where you broke down. What the fuck are you doing on top of those prices? You're not supposed to reintegrate the breakout and far less to test the trend. So this is something ugly in here, in this part of the trend, of this thing. What we have is this, is a fucking trending range, all right? So it's a bearish range that's been setting itself in here. Not a bear trend, not a range, but a bearish range. So it fails the trend, but still goes down. All right? So in here is this bearish wedge structure. So what it does is a simple thing. This is where you had your previous market top. This is where you terminated your bearish range. And then you only have a look at how you retraced. First time you broke the context in here. Second time in here. Anytime it happened, the market has been pulled backing. And now you goddamn have your 76% retracement, don't you think? So in here, you're definitely in the 61% to 76% area on the second dot. So what is the second dot after a speculative crash? It's probably the goddamn dead cat bounce. So in this market, definitely it's a range, but you'll trade it in a preparation for a bearish reversal trend, with this being a speculative bubble crashing along the way. So it's still a little bit too early to consider this as a won battle, but if I had to face such market, I would definitely fuck it up as a dead cat bounce and target way lower lows than this one. So what I would target right now for this is this. Bearish trend, hope phase, and crash, and destroying value, and despair phase, and everything like that, and terminating the value just like it was on Bitcoins. I would trade this just like Bitcoin at 17K. All right, everybody will think this is bullish. Everybody will think we're ranging before reactivating bullishness. This thing is going to crash most likely. All right, we don't know yet, obviously, but the current context in here is this. It is a range, but probably preparing for a nasty stuff, all right? But the actual answers in here are ranges. This range can be assessed to be bullish because obviously we never know. This thing could just digest in here and we could just do this, all right? It's kind of a triangle, and if we do such thing, then we'll be able to go bullish again. It's just that in here there's going to be high freaking level of problems, because if this was a speculative bubble, then in here no one will be buying. There will be not enough money to buy, and there will be freakingly aggressive traders selling in here, way more aggressive than that, which means in here there will be a breakout and a capitulation. All right, so we don't know yet, but that's how it is, and there's going to be a strong turning point in here. So what are we doing right now? We're trying to bearish breakout. This area in here is where you're going to figure out the next interesting area. Are we going to build dip? And in that perspective, it's going to be a triangle, probably bullish odds coming out of this. If it fails to support in here, then it's probably the market about to crash. What we've seen in here suggests a speculative bubble has been bursting, and it may keep on falling toward a potential crashing structure. Right? So these are your range boundaries. As you can see, this one is still not yet done. So far what you have is an immature range that takes a very dangerous bearish bias. So in here, I would accept any neutral range answer, all right? I would also accept any bearish range answer. I would also accept bullish range answer, because you see that we've started with a bullish trend. So if it is ending being a triangle, then this can be traded as bullish, all right? I would say it all depends about the context of this on the higher time frames. So we'll need further information in here to assess this range to be clearly bullish, but I would accept this answer anyway. You've been 14% saying bullish range. You've been 11% saying bearish range. You've been 23% saying neutral range. So 50% of you guys have been getting it right, because it was a range context. What I fear is people calling this a trend accumulation, but I would say it depends on what you meant, because if you meant trend accumulation before trending to the downside, kind of building an accumulation in here, I would say yes, because look at this, we've been so many times rejecting exactly at the trend channel, and we're reaching out to the bearish context. This could very well be a trend accumulation, not a standard one, but still could be one. So if you were saying bearish trend accumulation, I would say okay, but I hope you say that because you've seen this ugly bearish move on top of it, and you're forecasting this to be the early trending activity for a crashing market. If you said that and answered trend accumulation, I would say okay, you really got it right. If you answered trend accumulation to any other answer, I don't think you got it right. Those who said trend breakout, it's not even possible at the moment. We need to break through the fucking context. So if it was a breakout, we need to be there. So breakout is not a good answer, and 12% of you have been giving this answer. So 12% have to work this out, because that's not possible to answer this in here. 2% have been saying trend divergence, though it's 2%, but still it's not possible. And trend pullback for 16% of you, that's not possible. What the fuck do you see a pullback in here? There's no pullback. There's not even a trend in here. All right? To be a trend, we need it to break out. Where the hell do you see a breakout? There's no breakout. So this is not trend. This is a trending range. It was hard to trade, obviously, and most people will have been fucked in here, but still, it is a trending range. And in here, what we have is not a good sign. It's more likely a crashing market, but definitely not yet. It's way too dangerous to figure this out to be such thing. So there's no pullback, definitely not. This is no bullish trend. If it was a bullish trend, where's the goddamn accumulation? Where's the goddamn bullish breakout? Where's the divergence? It is no trend pullback. All right? So this one, if you got it wrong, then we really need to work on this one, because I don't accept answers for more than 25% of you. So 1/4 of you guys have been giving answers I don't really understand. Some people have been also saying 6% of others, I don't know, it is noise, and I would totally accept this kind of market. This is absolutely fucking noisy. This is messy, but I would say we've got a little bit of information suggesting, yes, we were trending, we were hesitating, we were ranging and hesitating. I think right about now we're pretty much ready for a bloodbath, but still needs a further confirmation. All right, now I would say in here bearish range to May. All right, next questions. Now we put the fucking price off the table, And this is weird because I've been doing this for the French and I've been clear about that. On some daily shows, at some point I've been deleting prices, but the users, they all told me, no, please put the prices back in the game. We find it too hard to analyze without prices. Then let me tell you something. Out of the statistics I just gathered today, I'll do it again, whether you like it or not. I'm going to delete the prices because you're way better at identifying context without the prices. I've been picking some way more complex things to analyze, and still you got it exactly, you got it right without the prices. So you're better without them, whether you like it or not. The statistics just speaks for themselves. This is a freaking nasty thing. If I gave it to you without the prices, with the prices, you probably would have made a bad answer. All right? So now let's do this, because if you figured out the previous context we just analyzed, it's something close to this. It's something similar to this. But in here, you got it way better. I have no trend things, no accumulation. So in here, it's definitely good. All right? So let's put it in perspective. Let's do the same old job, and we start all over again. What this is, you can see unfolding boxes just on support, not on resistance. You see ranging signal, trend targets. So all of you have another range signal in here. So what is that? It's a fucking range. All right, late stage trending range. You can see the trend channel was pretty narrow in here. So even if we don't see what's been happening before, oh sorry, you probably know this was a trend. That is, oh my God, this was a trend that was late stage trending in here, building itself a range, and we built a major market top. Right? Without even knowing what happened back then, you knew it was probably a trend. All right, so we're probably coming off a lower low out of this. Then this happens. Oh man, that's unexpected. So it means probably this has been an overextended trend, and we fuck it up. So we build a very harsh reversal, context boxes unfolding each other once again, and we build a market dip in here. Then what happened? So market dip, strong breakout with full context boxes unfolded, and then what is this? Instead of keep on pushing forward, we go back in here. We go back to testing the goddamn trend context channel. That's not normal. In a trend, you just fuck it up. You don't retrace 61% just like that. So once again, what is this shit? It is no bearish trend, and you never go bullish trend to bearish trend. It's just, it's been a speculative crash in here. Probably a market catalyst or something must explain this. We don't see signs of a bubble in here, but we don't have yet enough information. So if this was a very overextended trend, then this is absolutely normal. If this was just a normal late stage trend, then this is probably a catalyst who's been causing this. We don't know, all right? But all we can tell is that something unexpected, some excessive prices have been playing in there. All right, then we normalize, as we can see. We go back to trend channel, to context channel, fail out of the trend channel, back of the context channel. So what does that look like? The same old shit. It's probably another bearish range. All right, we try to set the trend, but we always failed. All right, so it's a very, very narrow, but still, I would say, bearishly oriented range. And this one would probably have been dangerous and hard to catch. Probably would have been caught in the lower time frames. As you can see, we definitely see that this, remember, this is the lowest time frame context. So the 4 point, you probably would have been able to trade this one on the lower time frame. The 6 points, definitely probably as well, but in a lower context. Still, we're trying to analyze the market in here, but to do this, we need to figure out what the hell happened back then. So do it all over again. Market top, market bottom. We know this one has been reached out to by a bearish range. What next? We break the context in here, so this boundary is valid at this point. We tried in here another time. Breakout target in here. Range targets. Range bearish range targets. So it's definitely showing up so many range. We got another range signal in here. So yes, we're definitely ranging in here. We just need to figure out how mature to know what we're doing. So in here, do you take the trade at number one? Goddamn no, you need to wait for at least 61% retracement. You knew you were bearish ranging, so you cannot take trade number one. You probably would have taken trade number two in here, which was 61% retracement. All right, so this one is tradable. Number 3, probably as well if we got in here. We don't know, we don't see if prices have been reaching out there. We know in here because it was a red triangle, all right? So in here is a trade you take, all right? These are the range, so what you do is you profit take anytime you get to the opposite context. This is where you would have profit took, all right? So we go here, we fuck up the trend channel, the context channel, and we probably would have locked on the gains in here at the opposite Fibonacci level. Remember that. In here, you still need to profit take at 61 to 76 maximum profit. So you would have had to entirely profit take in here. What does the market do in here? It tries to break and obviously reverse. That's another signs of range. Ranges are trends that fails to set themselves. We tried to trend, not make it. Tried to trend, didn't make it. So we're still doing the same old stuff. We're back into resistant context. So I would say this is looking like that. We've got this confirmed, and this one is still pending because this one could still go a little bit higher. Remember that we need to break context. So this one could go there before reversing. All right. So this range boundary is still pending. If we break below 50% channel, so if we go there and below, we'll be able to confirm this as being a 5th range contact. 1, 2, 3, 4, 5. All right. What does that look like right now? Bearish tops and bullish supports. Looks like a fucking triangle. So it is hard to say. All we can tell is that we're late stage ranging, so no one is fucking trading anymore. No one does out of this. We're now searching for potential trade accumulation, which means we have the goddamn answer. We know what this market is probably. We know it's a range. We know it's a late stage range. We know we're looking at trend accumulation to forecast a breakout. So what is this? All right. Bearish context, trend channel. So multiple options in here. If we go there again, all right, then it's trend context channel, trend channel, context channel. Then this will be an accumulation. So if we go there, in here is where the accumulation will be setting itself. If we go there, it means we can validate another boundary, and we're probably going to have to set ourselves out of this triangle and wait for an accumulation. All right? So what are the good answers in here? As we can say, it's a neutral range. 59% of you have been giving this answer. Clap, clap. Very good job. It's definitely a neutral range because we have negative tops and positive bottoms. So it's a triangle at best, and we don't goddamn know what this is. We don't have any available information in here to go any further than that. We could zoom out these charts to give it a bullish or bearish oriented bias, but still it is neutral range, and even I would give this answer. So all right, in here it's definitely a neutral range to me, but still I would have accepted trend accumulation, and I see 10% of you guys have been giving this answer as well. So 59% neutral range, 18% have been saying bearish range, and as I said, I would also accept trend accumulation, but it is just a little bit anticipated. In order to be actual trend accumulation, prices needs to be there. They would require to be in the context and not just slightly below it. All right, but I'll still take that as a viable answer. Just you guys went a little bit too quick on this one, but still almost valid. So in here, good answers, guys. You probably have more than 90% success out of this question. So what I can tell, what I care about is not how much of you guys get the actual exact same answer as mine. What I care is how much of you guys got it wrong. And in here, as you can see, it's a complex fucking thing to analyze, but 90% of you would have done a good choice into identifying this goddamn context. So you're definitely fucking better at understanding what it goes on without the prices. And whether you like it or not, that's fucking true. Now let's take this. Another chart, same thing, we start here, we finish low, so at least something bearish. We'll try to figure out if this is a trend. So in order to figure this out, what we do is pure and simply we put a goddamn trend analysis. All right, so we start higher and finish lower, so we're going to start figuring out if this is a range, if this is a trend. So we're searching for an accumulation. We can see price may have been rebouncing in here. We don't know. All right, all we can tell is that bam, this happened. Could be a breakout. We see the breakout. We see prices accelerating. We've seen fucking up the context. It's been a little bit brutal as we literally fucked up the context boxes. All right, we're reaching back in here. Question is whether this managed to be divergent or not. Hard to say, but then big problem. We're back in context. Something goes wrong for a trend. Remember that the trend doesn't pull back that violently. So in here, same old shit. It's probably a goddamn bearish range at play once again. So we're going to push on further. What happens next? Absolutely no fucking thing. Back in the context, it's pushing prices down. Still no bullish breakout context, so we're still waiting. Oh, we're breaking the bearish context once again. We barely touched the support hit here, but still we didn't really. And in here, breaking through bullish context, and bullish context. Broke multiple times, and in here finally as well. All right? So these are all the informations you can take. All right? So in here, reading what happened previously is a little bit complex. What I would say is something pretty easy. It means it might have been easier to figure out of a different time frame. But what's at play in here is that this was a bearish impulse. This was probably another one. As you can see, these are almost trends. And this is a mid-range, kind of a sideways triangle. It feels like the market in here has been building an underlying triangle. All right, and add on 2 bearish impulses in between. All right, so I would like to say if this was a bullish trend, major bullish trend with a major low follow within that, then I would say this is probably a mature range, A, B, C structure, and we will be ready to accumulate for a bullish range. We will just be in here to build a higher low. Alright, what we'll do in here is building the higher low, preparing for a goddamn accumulation. Alright, so what I would say the most probable to come for this market is this. Alright, but still, the answer is what is this at the moment? What's the current context? Alright, let's answer this. So as we can see, we've been late stage doing something in here, at least we were ranging and bearishly exiting. So we figured out to be a neutral range. Alright, how mature is this range? 1, 2, 3, 4. So we're mature range. So those guys will give me trend accumulation answer. I'll accept that. But once again, we're still not yet in the resistant context. So this is where I'll accept the trend accumulation answer. So we're not yet trend accumulating, but we might get toward it. So I'll take that as a good answer anyway for those who've been giving this one. So it's question number 8. Most of you guys have been answering for 45% a bearish range, and I'm definitely agreed with it, because as you can see, we've got lower highs and lower lows. So the range have been bearish. We're still bearish in this range, and I think this low is more than enough. So I would accept the bearish range, because this thing can very well trigger another fucking selling entry, because remember that this stuff could do just this and this. And in that perspective, you might definitely want to sell eventually in this area. All right? Unless this looks like an accumulation, in that perspective, you're going to trade a bullish range. So I would say in order to trade in here, there's nothing to trade. But in order to assess the context in here, what you know is that what you give a shit about is whether prices goes there or goes there. Current prices, uninteresting as hell, but the current context is a late stage bearish range that you might eventually even push one more time or add to a potential accumulation near this area. All right? So good answers in here, as 17% of you have been giving the trend accumulation answer, so I'm glad you did, that you see this one coming, but you're still a little bit too early on this one. Don't anticipate too much. You need to fit the rules. There might be an accumulation coming over, but not now. Some say bullish range with 10%, and I would definitely accept that, but in order to give this answer, you need to make sure that there is a lower, massive low out of this, and you must be sure that this was a bullish trend, and we're just an A, B, C correction after rising again. You don't have that information, but if that's what you thought, I would say definitely yes, you're right with this, but you need additional information that I didn't give you so far. Those who said bearish range totally agreed with it. So, which says, if I sum up all those information, it's 3 out of 4 guys have been giving a good answer. And if I add the neutral range, it's even more than that. So almost 80% good answers on this one. Once again, I'm sorry to say that. That means just 20% of you guys have been getting it wrong in here, and that's totally acceptable. If I can get 80% success on identifying context to trade, that's far better than what others will do. So definitely fine with deleting prices to get you guys better at the job. And I can also include others who said, I don't know, it's a noise. And if I just do this, I think those who are wrong are, this is not bearish trend. That doesn't fit the bearish trend. So the bearish pullback, I don't really accept that. The trend pullback, I don't really accept that. 8% of you have been giving this answer, and 6% have been saying final excess. But that doesn't even fit the plan. Even if this had to be a bearish range, which means 5 sets of waves, 1, 2, 3, 4, the final excess will set itself in this area. All right? So final excess is not a good answer. And in that perspective, in order to get that, like I said, will be wave 1, 2, 3, 4, and 5 to terminate. And in here, it will be a late stage bearish range. But still, that doesn't fit the trend. Remember that the trend needs to have a breakout, divergence, pull back, and everything like that. So all of those of you who've been answering pullbacks, any trend signal, that doesn't fit the plan because we're not in trend right now. All right, so the good answer in here is, like I said, late stage ranging. So I would say bullish range to me because I think, I know that there was a bullish trend before this. So I know this is the kind of stuff you want to buy after these 2 sets of wave consolidations mature enough to buy. Question number 9, because we're already 1 hour long, so we're going to try to do it quick. So in here, oh my God, what the hell this is? Feels like a range, so we're still same price as we were at the beginning of this sample. So we're going to try applying the range structure and trying to confirm the range. So what we do first is, all right, range, 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 and range. All right. Definitely is a range. All right, so anybody who think this is a trend, first of all, you got it wrong. It's not possible. So many fucking breakouts. I mean, that's incredible, and I'm not even counting the crosses. Damn, look at this. I'm just going to highlight all the crosses. It's a fucking snowball. All right, it's incredible. There's things every fucking where. So this thing has absolutely no timing. It's just about fucking up the timings. All right, so it is a bloodbath. So many fucking signals. It's way too dangerous to trade any such thing. All right? So you could even stop the analysis at that stage. What is this fucking thing? I don't know. It's noise. All right? But still, we're going to push it a little bit further away to just get to the same exact conclusion. But I wanted you guys to figure this out as being absolutely unable to read. So anyway, we're going to try highlighting other stuff. So we broke context in here, broke context in here. So what have we done in between? 2 times we got to, we broke in here. So 2 times we failed at the bearish context without breaking it. All right, so we broke the support without breaking the resistance context. All right, go in here, then in here, then in here. Then we go in here and in here. Then we go in here and in here and in here and in here, and here we are now. So wow, that's hard to say. So we're going to go step by step. All right, I would say in here, what does that look like? Bam, 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 bam. As you can see, it's a goddamn bearish range, which means we're breaking context support without breaking the resistance context. And then we do what? All right, a few noise in here to the upside. All right, something like that. All right. That's odd, and then bam, bam, bam. It's definitely unable to read. Too much breakout. This is fucking noise. Once again, it's a bearish range, so it's something that fails to go bearish, reversed bullish without even giving a pre-signal. Then it reversed bearish without giving another signal, and then now it's back to bullish. So this is definitely the kind of market that fucks your brain. There's nothing to trade in here. get the fuck out of this. Way too much breakouts. I mean, this is the most beautiful example of something that is goddamn noisy. It's just about breakouts. I mean, this thing is just about fucking you up anytime you're gonna think something. So there's nothing to trade in here. You just get the hell out, or don't trade this on this current time frame. All right. So question in here, obviously no answer. It's a noisy situation. What have you been given an answer in here? I'm fine. 80% of you guys have been figuring this out, and that's great. 80%, 18% have been saying, yes, that's unable to read, and that's good, because many of you guys would just try to analyze any fucking thing, thinking that there is a hidden secret somewhere. In here, if you went to the conclusion that it was a noise, good job, because there was not enough, there was not even a point to go any further than what we've done the first time. Showing up too much breakouts, irrational price action, we cannot figure out to be a range or a trend or anything. It's just fucking noise. Some people have been saying neutral range for 22%. I would accept that. This is a range. So all you can do in here is trading at Fibonacci retracement level. I would accept that. I would probably have given you this trade in here, all right? Because in here you probably have been taking 76% Fibonacci retracement from top to bottom, all right? So you would still be eventually in this trade, but you would be already ready to be fucked up in a few days, because this thing is no market, all right? So you would eventually take this trade out of a neutral range, and you would be safe by now, but not necessarily safe heading toward an actual gain. You've got multiple range signaling here. Actual range, not just breakouts. So I would say yes, the neutral range is acceptable in here. To me, the actual good answer is really noise. But some people, I mean, 24% of you guys have been giving me trend pullback answer. How the fuck does this look like a pullback? So I don't really get that, but we're gonna have to talk about this thing, because if you figure this out to be something to trade in a trend context, then you're gonna have some problems with the strategy. So this is definitely wrong, and 24% of you guys have been doing this, and I'm not happy with it. There is a lot to work in here, so we're gonna take care of this one in some educational content videos, and I'm gonna note this one as well, because question number 9, huge problem. All right, that doesn't mean some of you guys didn't get it right, all right, because some of you guys did get it right. The thing is that what I care about is this. Those who've been giving pullback answers, I don't like that. Those who've been giving trend breakout, I don't like that either. That's not possible. Those who said trend accumulation, that's possible, but I rarely see how you can definitely think. I cannot even see where you see an accumulation. So what I think in here is that whoever's been giving this, whoever's been giving this or this or this, which means it's mostly 45% of answers, I don't get it. I don't understand how you can get to those conclusions. So you really guys need to explain me how you got to this conclusion, because there's something to learn out here. That's the most interesting. When you get it right, that's good for your confidence. When you get it wrong, there is something to learn. But the problem is in here, I cannot even understand why you get to those conclusions. So you guys have to tell me what led you to this kind of answer. Then question number 10, and we terminate with this. So what is this? Starting high, being lower. So we're going to try figuring if this couldn't be a bearish range or a bearish trend. All right. So what is this? All right. It's pretty fucking noisy. So we let it go. We don't try to understand. All we can say is that this was ranging. Yes. All right. So big range, multiple breakouts. Feels a little bit noisy on this one as well. All right. Don't you think? Many breakouts. Many, and it doesn't even look like any fucking thing to be read. All right, these are all the breakouts in a single chart, and this one as well. So too many breakouts, way too many. But still, we're gonna try looking at this thing. All right, so in here could be a breakout. We barely see an accumulation, but it could have been a flat range accumulation. Bam, double top structure. We break it down. And in that perspective, I would accept this to be the broken level, right? We break through this, right? So that could be acceptable. So break down, we build a bottom, break down, we see the breakouts, prices have been pushing forward, so I would accept that. It's a little bit extreme as we broke through the context channels and unfolding them. But still, in here, if this was a trend, what would it look like? All right, we'd push to divergence, then we'll go pull back and final excess. Do you see any such fucking thing in here? So something goes wrong once again. This is not fitting the trend. What do we do out of this? We fucking pull back to the context channel. So this is not a trend. This is at best a trending range, a bearish range. All right? And what happens? You see another fucking sets of breakouts, another range signal in here. So it's definitely another freaking fucking thing like that. All right? So it is hard to say, but that's definitely what it is. Another trap. We tried to trade this, but instead of creating a bullish trend, what do? We fucked ourselves in here once again, trying to overcome the context. We go too bullish, we fail, and we back to the support context. And then what? We range. So many breakouts. So many breakouts. In here, we finally get out of context. And out of context to the bear side. This pretty fucking drop in prices, and we're back into the resistant context now. So what the fuck is this? All right, major top, major bottom, major top, major bottom, trying to build itself. So what is this? Higher lows, lower highs. Freaking fucking mess. Really a lot of breakouts, so it's definitely a range, definitely is. You're in support context, which means you rather like to trade this bullish than bearish because you're more into supportive area, but that doesn't even nearly mean that this is going to be. I would say it's a 51 to 49 bullish range, but this is at best a range. I would definitely agree with those who will say this is noisy because it's as noisy as the previous asset. And to be honest, those of you, I hope some of you have been figuring this out, but this is no more than that. So this is actually the bigger time frame of that shit. So we were unable to read any fucking thing out of this chart, but basically we cannot even read anything else from the higher time frame chart. So this thing is definitely the kind of asset you don't give a shit about because you don't know what the hell's going to happen. It's really noisy, and at some point we've already been tried some bearish breakouts in here who started to be approximately failed. So it could be about to bullish breakout, but it could be also a fail. I mean, it could just be noise. We tried a bullish breakout, but it doesn't work out, and we set ourselves for a long run in here. We don't know. All you can tell is that this is the most uninteresting asset to trade. All right, so I would say the answer in here, others don't know as well. I would accept neutral range because in here we can clearly see the big triangle selling itself. You could trade this bullish, so I would understand the bullish ones only if you figured it out because of the support context alert, all right? The bearish range, possible as well. So I would say it's a range, but if you want to trade this bearish, it's because this is a major trend bearish, but you need to have further information. So you need to zoom out even more on this chart. If this chart has an overall bearish trend, then this range, a triangle, will probably be bearish range orientated. If this has a major bullish trend, it's probably going to be bullish orientated. If this thing is just a fucking big range, then it's just as neutral as it could be, which means it's uninteresting as hell. You guys gave me bearish range at 32%, neutral range for 13%, and 7% of others don't know noise. So half of you guys have been giving me good answers. Bearish range, neutral range, or others don't know, so that's good, because as for now we're still trading lower than the initial prices, so bearish range still looks like more accurate to me. So 50% of you guys got it right, but still 18% of people, 19% saying trend accumulation. What the fuck is that? The range is mature, yes, but where do you see a goddamn accumulation? Accumulation would be possible only if we were doing this. Getting to context, trend channel, and context. There is nothing suggesting we went there. So for now, this is where you would actually be able to answer accumulation. So far, you're anticipating, and it's dangerous. You don't anticipate accumulation until they're there. All right? So you really need to wait for further information to give me this answer. I would say it isn't that bad, But you really need to pay attention to this, because I bet the guys of you who've been answering this in here, which said trend accumulation, you're probably the same guys who've been anticipating the accumulation earlier. So don't do this. The lesson you'll need to take out of today's review is that if you go anticipating trend accumulation, then you must want them to wait to get back in context. Some people said trend breakout. I don't even nearly get to this, and you're 10% giving me that answer, so I don't really get to this. So 10% is not that big of a deal, but still, that's not normal. Breakouts. Where the fuck does the breakout occurs? What are the breakout conditions? First condition for a breakout, you need to have a goddamn cross, all right? Just like that was a possible breakout area. You need to be below the context channel and accelerating through trend channel. So this is the area where you would have been able to forecast the breakout. Are we trading on top of resistant context? Not at all. So this is definitely not a breakout. Not possible to answer breakout in here. Some people have been saying trend divergence. The fuck is, it is no trend. It doesn't fit any trend. In order to be trend divergence, you need to be following a breakout. There is no breakout in here, so there's no trend divergence. And some other 7% have been saying trend pullback. Same thing. If you answer trend pullback, means the previous market state was a divergence. Do you see a goddamn divergence in here? No, because there is no breakout. No, because there is nothing suggesting this is trending. All right? So this is a range, this is a neutral range. It is a very noisy one, very dangerous one, as this is a triangle, and that's all we can tell. Anyway, despite that, most of you guys have been giving good answer. It's just this one was a little bit tricky, obviously, but despite question number 10, you're definitely way better at identifying context without the prices. That's the first conclusion I really get down to. There is a few questions we need to review, question number 3, 6, 9, and 10. But most of it, you get it right, and even if you made tiny mistakes, you probably would have traded it safely anyway. So I see, good job. There is way for improvement, and I will definitely work myself to improve you guys in this direction. There's still a lot of work to do, but I'm pretty fine with what I saw today. I was actually expecting such things, so I'm not disappointed. I'm not excitedly surprised, but still it feels like a good surprise to me, and moreover I'm happy I finally get to the actual question, to answer the actual question I was wondering, do I need to force you out of prices when it comes to context analysis? And the answer clearly is yes. I really need to suppress prices, to delete prices when we do context analysis altogether. That doesn't mean I won't be an in-between stuff. I will put price here and there, but most of the time when the question will be identifying context, we'll do it without the prices. You're way better at this because you don't miss the breakouts. You have a far better vision of the overall structure, and that's definitely better. So that being said, I wish you guys a good one. We'll see each other again eventually tomorrow or next week to make the last 10 questions. Thank you guys for listening. I hope you'll be more participating the next time. It's all, of course, free, and all you can learn in here is gaining confidence or being proven wrong, and in any way it means that you're going to learn something. All right, bye guys, see you the next time.